Let's get more on where the markets are heading into year-end with Lori Calvasina of RBC Capital Markets. Lori, I'm sure you've been listening to our conversation about market leadership. How do you view market leadership in terms of, people are really hoping that big cap tech bounces back along with the markets? Where do you stand on that?
So I think you have to be very selective when you think about the tech trade. And I agree with a lot of what was just said. I think areas like semiconductor software, some of the tech hardware names are interesting. But I sort of agree that I don't really view consumer-driven internet as, kind of the growth story of yesterday. I don't think that's the growth story in the market going forward. And so I know the valuations are compelling, but I really do think that when you're thinking about leadership, you don't want to just think about what were the growth stocks of yesterday. You want to think about what are the growth stocks of tomorrow. And I did view, sort of Chris's comment on the industrials very interesting. That's a conversation I've been having with a lot of investors, whether it's the reshoring thesis, things happening on the ESG front in that sector, just this idea of the reinvigoration of the old economy is something a lot of investors I speak with are talking about. So I think you want to really, kind of think about where is the next big growth story in the market coming from, and that's probably what's going to lead us out.
Lori, it's Karen. Thanks for being on. So when you think about the industrials, do you imagine a scenario where they get an above market multiple? Because that hasn't been the way for I don't know how long.
Well, I think that when sectors transition from value to growth, we often do see a re-rating. And when we look at our valuation model on industrials right now, it's a little bit north of neutral. So it's looking a little bit expensive if we do a relative PE and then do a Z-score. It's not looking like it's at peak multiples. So I don't think you even necessarily need at this point to move into kind of a new valuation paradigm argument for industrials. I do think that there's still a little bit of room just on the traditional framework for it to actually make some additional moves.
Lori, I wanted to talk about some of the, some of the things that you're talking about with clients that are out of consensus. And you say that clients are excited about European equities on dollar weakness. You think that the dollar continues to weaken, continues this recent trend of weakness here?
Well, what's fascinating about the European discussion and the weaker dollar discussion, that's really what I heard, about 2 weeks ago when I was, traipsing all through Europe, talking to European-based equity investors. Once I got back to North America, the excitement about European equities was much less profound. Let's just put it that way. But what I did try to point out in those conversations with European-based equity investors is if you look at the recent dollar weakness, you're going to need to get a lot more of it for it to actually help earnings for the next couple quarters. If the dollar just stays flat, it's actually still going to be up on a year-over-year basis, and that's still going to bite into earnings. So I do feel like it's maybe a little bit early to start making those weaker dollar plays. But I do think the reversal that we've seen is interesting. It's interesting to me as well that people are just ready for new things to talk about, Melissa. People are tired of talking about the Fed, tired of talking about whether or not we're going to have this recession. All people wanted to talk about in Europe was that move in Europe, that move in the dollar, and the reopening in China. And there was just a sense of relief of maybe there can actually be some new themes to play this year. Or next year.
You're still sticking, though, by your small over large cap stock call that you made in July?
We are, and we think there's still room to run here. We've been watching the valuations very, very closely. Back when we upgraded in July to overweight, you were down at around 11 times, which is typically where the forward PE troughs out. And it's moved up to around 14 times, but the average is a little over 15. So even on an absolute multiple, you've still got room to run. We also think small caps just did a lot of the hard work early that the S&P is still going through right now to price in a recession. The small caps are already trading like we've had a bigger spike in jobless claims beyond what we've seen, and as though ISM manufacturing is trading down around 40. So it's really, kind of pulled forward, kind of the recessionary impulse that I think the S&P 500 is still trying to digest.
Lori, thanks. Great to see you.
Thanks for having me.
Lori Calvasina. Julie Beal, I could feel you just being happy and warm all over when Lori was saying she still loves small caps.
Girl after my heart. Yeah, I agree. I think the smaller cap names have really taken it on the chin this year, and earnings have actually held up relatively well, just like everyone else. What I think is always interesting is to look back to the pandemic and see how smaller businesses responded, and they were really nimble about taking down their cost structures, and they were really thoughtful about conserving cash. So while I wouldn't jump into small caps with both feet, I think you can be really selective and find the ones that are higher quality. To me, what people are going to really be attracted to through 2023 is going to be earnings durability and feeling confident that the forecasts that are out there are the real forecasts or what's achievable.
How's that small cap chart look to you, Chris?
Well, it's made no progress since about July, right? So we've been treading water. I do think there is a desire for these things to work. I think we hear it in our travels and with clients. There's a desire for something new for small caps. But I would pick apart the Europe call here for a minute. What was Europe's biggest headwind over the last 10 years was they didn't have Apple, Microsoft, Google, right? They didn't have the big tech weights that were such in demand. That could be an asset here. So I'm very intrigued on the idea that European industrials, European basic materials, right? Those are the big constituents in that part of the world, emerge as more durable leadership. Now, it's hard to reconcile that with German recession or the likes, but there's some clues, I think, that speak to this as a developing theme for 23.
We saw a huge run-up that you wrote very nicely, Karen,
well, thank
and
you.
have since pulled the ripcord on.
Yes, Auf Wiedersehen on the German. Right, exactly. Yes. It makes, I mean, it's, you know, as Tim always says, it's, you make the most money when things go from really terrible to just bad. Things were pretty terrible there not long ago. They're not great now.
So, but the underperformance for small caps versus large caps has been going on for, I think it's extended 15 years, 20. I mean, it depends on how you look at it on a chart. It could be more than 15, 20 years with a here and there, a little bit of a blip. What I found interesting was her dollar call. So inverse relationship to oil. So if the dollar comes in, oil goes higher. I had my $65 bet on oil for year end. I got close, but between the U.S. refilling the SPR and between the dollar issues, I think I might have to tap out on that.